Hi, I'm Rashawn Levin, Realtor with KW United, serving Northern Virginia, Maryland, and Washington, D.C. Buying a home is one of the biggest investments you'll ever make, but protecting it, that's where homeowners insurance comes in. Whether you're a first-time home buyer or a seasoned homeowner, understanding your insurance options is essential. Homeowners insurance is your safety net. It protects your home, your belongings, and even covers liability if someone gets hurt on your property. But here's the key. No two policies are the same. The right coverage depends on your home's value, location, and unique risks. In today's video, we'll break down everything you need to know about homeowners insurance, from choosing the right coverage to avoiding common pitfalls. Let's dive in. One of the biggest mistakes homeowners make is assuming their policy covers everything. For example, flood damage, not included in standard policies. Another common error is failing to update your policy after renovations. These missteps can leave you financially vulnerable. The solution? Review your policy annually, stay informed, and ask your agent questions. Liability coverage protects you if someone gets hurt on your property or if you accidentally damage someone else's property. It covers medical expenses, legal fees, and settlements. If you own high-risk features like a pool or trampoline, consider increasing your liability limits for extra peace of mind. Let's review what homeowners insurance typically covers. Homeowners insurance generally provides coverage in these key areas: dwelling coverage, repairs or replacement of the structure of your home due to damage from covered events like fire, wind, hail, or vandalism. An example of this would be roof damage from a storm, fire destroying a portion of the house, or tree falling on the home. Other structural coverages are structures in your home that are not attached to your home. Examples of this is detached garages, fence, sheds, or gazebos. Personal property coverage, the cost to repair or replace your belongings if they are stolen, damaged, or destroyed due to covered events. Examples of this is furniture, electronics, clothing, and appliances. An additional note here, high-value items such as jewelry or art may have coverage limits unless you purchase additional riders. Loss of use. So this is about additional living expenses, costs for your temporary housing, meals, and other expenses if your home becomes inhabitable due to covered events. Hotel examples of this is hotel stays, restaurant meals, and storage fees while your home is being repaired. Next, personal liability coverage, legal and medical expenses if someone is injured in your property or you accidentally damage someone else's property. Examples of this if one of your guests slips and falls on your icy driveway, or your child accidentally breaks a neighbor's window. Next, medical payment coverage. Small medical expenses for guests injured on your property regardless of fault. Example of this is a visitor trips over a rug and needs minor medical care. So now let's talk about what homeowners insurance typically does not cover. While insurance is comprehensive, certain risks and damages are generally excluded unless they are added to the policy and being purchased. Natural disaster is not included in standard policies. So examples of this is water damage from rising water or heavy rains. This requires separate flood insurance. Earthquakes, damage caused by seismic activity requires earthquake insurance. Sinkholes, damage from ground collapse in some regions. Maintenance and wear and tear, so damage from neglect, normal aging, or lack of maintenance. Examples of this is roof leaks from an old roof, mold growth, or pest infestations. High value items, which I had talked about that before, so expensive things like jewelry, art, or collectibles, you would need to add an additional personal property coverage rider for these things. Intentional damage, so damage caused intentionally by the homeowner or household members, so such as setting a fire or deliberate destruction of the property. That's not covered. Certain breed of dogs, so liability coverage may exclude certain breeds of dogs because they deem them high risk by the insurer. So check with your insurer to confirm the coverage of your pets. And that's not just dogs, it's other animals as well. Business-related activities, so damage or liability from a home-based business, injuries to clients visiting home office, or damage to business equipment. Acts of war or government action, so this is damage caused by war, nuclear events, or government seizure of property. Sewer backup, damage by sewage or drain backups. So the solution here is to add a sewer or water backup coverage to the policy. Home sharing, Airbnb. So damage of liability due to home sharing activities may not be covered by a standard policy. The solution to this is to consider a short-term rental insurance added to your policy. So how to ensure full protection. So you want to add riders or endorsements for floods, earthquakes, or high-value items. You want to review your exclusions, understand what's not covered, and purchase additional policies as needed. And you want to do regular policy updates. Keep your insurer informed of renovations, new valuables, and changes in risk factors. Also, an additional insurance you can add is an umbrella policy, so that adds an extra layer of liability coverage. It's a must-have if you own multiple properties, host frequent events, or have significant assets to protect. For as little as $200 to $300 a year, you can safeguard yourself from expensive lawsuits. Understanding these coverage details ensures you have the right protection for your home and belongings, giving you peace of mind when the unexpected happens. So now let's talk about the importance of reviewing your policy annually. So you should review it because life changes and your insurance needs change. A renovation, a new addition, or even buying expensive electronics can affect your coverage. So reviewing your policy annually ensures you're not caught off guard when it matters most. So understanding deductibles and premiums. So your deductible is the amount you pay out of pocket for a claim, which directly impacts your premium. The higher deductible that you have, the lower your premiums. But it also means more out-of-pocket costs if you need to file a claim. Choosing the right balance between your budget and comfort level of risk. Raising your deductible means that you agree to pay more out of pocket before your insurance covers a claim. It can lower your monthly premiums. However, it has its drawbacks. Here's what you need to know before increasing your deductible. So you would have higher out-of-pocket costs, which means if you file a claim, you'll need to pay more upfront to meet the higher deductible before insurance kicks in. So example, let's say your deductible is $2,500 instead of $500. If a storm damages your roof and the repairs cost $3,000, you will be responsible for the first $2,500, leaving only $500 covered by your insurance. So if you don't have significant savings set aside, this could create a financial burden during an already stressful time. So review that. So now we're going to talk about replacement costs versus actual cash value. So replacement costs policies cover the full cost of replacing damaged property at today's prices, while actual cash value deducts depreciation. For example, if a 15-year-old roof is damaged, replacement costs will pay for the new roof, while actual cash value might only cover a fraction of the cost. For most homeowners, replacement cost option is the better option. Claims history and insurance premiums. This is a lengthy topic that I want to go into in great detail. So every claim you file and even the claims history of your home can affect your premiums. Insurers track this data using the Clue report. Too many claims, there are going to be higher premiums. That's why it's important to save your insurance for major incidences and handle minor repairs out of pocket when possible. Your claims history and even the claims history of your home can have a significant impact on your ability to secure insurance. Let me share a real story to show you why this is so important. So a few years ago, I had a couple that was excited to buy their dream house, a charming property with plenty of character. They were in their final stages of the home buying process when their insurance company flagged an issue on the Clue report. It turned out the home had several years ago, there was a fire and a claim was filed. The insurer needed to have proof that the fire damage was fully repaired by licensed professionals. Without this proof, the couple was not able to get insurance required to finalize their mortgage. And luckily, the couple's agent that we were working with at the time stepped in and worked to gather the information from the seller to resolve the issue. The seller had to provide documentation showing that the repairs were completed by certified contractors and passed all the necessary inspections. With the proof in hand, the buyer secured their insurance and the sale went through. But if the documentation hadn't been available, the home might have gone back on the market and the buyers could have lost their dream home altogether. This story highlights the importance of reviewing the Clue report, especially when buying an older home or one with history of claims. If you're in a similar situation, work closely with your agent to address any red flags and ensure that you have enough documentation in order to move forward. So now let's talk about renovation. So you want to make an addition, you want to add a new bedroom, upgrade that kitchen, or add a deck to the house. But you're not just improving your home, you're also increasing its value. While this is great for your lifestyle and equity, it also affects your homeowner's insurance. Here's why. Increased replacement costs. Adding square footage or luxury upgrades such as custom cabinetry or high-end appliances increases the cost to rebuild your home. If you don't update your policy, your insurance may not cover these improvements if disaster strikes. So liability considerations, features like a pool, hot tub, or even a new deck can increase liability risk if someone gets injured. While using these features, you'll want to make sure your policy includes enough liability coverage to protect you from potential lawsuits. So also, you may with some renovations like installing a new roof, updating electrical systems, or adding a security system can make your home safer and reduce your premiums, so you may be eligible for a discount. Let's say you renovated your kitchen, replacing laminate countertops with quartz, adding top-of-the-line appliances, and upgrading the lighting. The cost to rebuild this space is now much higher than it was before. If you don't update your policy, your insurer might only reimburse you for the old, less expensive materials and appliances in the event of a claim. So updating your policy is simple but crucial. Here's how to do it. Notify your insurance agent as soon as the renovation is completed to discuss your changes. Share receipts, contracts, or appraisals for the work completed. This helps the insurer calculate your new replacement costs accurately. If you've added high-risk features such as a pool, trampoline, or outdoor entertaining space, consider increasing your limits, and also ask them for any potential discounts for renovations if they include safety upgrades such as new wiring, plumbing, a security system. Renovations are an exciting way to add value, but they bring on new responsibilities. So make sure you talk to your insurance agent to make sure you're fully covered and up to date with your coverage. So what do you do if you are underinsured? If the policy doesn't cover the cost of rebuilding your home, you're underinsured. Work with your agent to adjust your limits and avoid financial stress after disaster. Regular review can help you chase I would catch the gaps before it's too late. Homeowners insurance doesn't have to be overwhelming. By understanding your policy, reviewing it annually, and making informed choices, you can protect your home and your financial future. Have questions? Drop them in the comments or reach out to me to connect you with an insurance agent. And don't forget to like and subscribe for more tips.